Hi everyone and welcome to today's morning report. Chart appraisals on Wednesday the 27th of July with me, which is market analyst at Handset Markets. A couple of things that are impacting markets today. Suggestions that the stimulus package that Shinzo Abe is going to be putting together, fiscal stimulus in Japan, is going to be as much as possibly 27 trillion yen, which is around about sort of 260 billion dollars, and that's more than the 10 to 20 trillion yen that they'd previously sort of been discussing. So that's interesting, and that has started to weaken the yen again. The yen strengthened yesterday on the potential disappointment, or the market had been sort of looking at a probable disappointment from these stimulus measures that you could get out of the government and also the BOJ on Friday. But again, the yen is weakening, so flying around a little bit on these sort of conflicting reports. And you could see that fiscal package announced possibly even today, apparently. But also the market is sort of looking forward to the Fed tonight. They've got the FOMC statement at 7 o'clock tonight. No changes expected in the FOMC rates decision. However, you could get an impact on the statement, which is likely to sort of talk a little bit more about Brexit. But again, it's fairly early doors, and nothing too significant has come out in terms of data since that Brexit decision yet. So it'll be interesting to see what impact that has on the markets. The dollar is mildly stronger. Obviously, we've got the yen weakness, but also sterling slightly lower. Aussie and Kiwi are also slightly lower. So very marginal sort of dollar strength, as you can see in this trade-weighted dollar. We've had the 2-year Treasury yields picking up again in front of the FOMC. That does quite often happen. It certainly happened in April. Let's actually zoom out and we'll show you. Happened in March, happened in April. Didn't happen in January, but happened in December as well. So it does quite often tend to be the case that we see that. Just realised I haven't got the June one on this chart, but I think it was this one here. Anyway, so what we have got is the dollar's mildly strengthening, and that is also again still impacting on the oil price, still dragging the oil price lower. Just very sort of marginally lower today, but still I think the stronger dollar is impacting negatively on the oil price. And just generally speaking, I think markets other than that are pretty much just waiting for this Fed decision, and also the BOJ on Friday. Equity markets were strong in Asia, well, strong in Japan at least, on the back of that yen weakness, but that sort of filtered through to sort of mild gains between sort of 0.25% on FTSE to 1% on the CAC today. But again, I don't think you're going to get too much further real direction in front of the Fed tonight. Now, in terms of your data before the Fed, we've got, let me just try and find the data. Where's the announcements? Sorry, I've actually lost my announcements. There it is, sorry. We've got UK GDP at 9:30. UK GDP is expected to, well, depending on the forecast you look at, I sort of look at Reuters amongst others, and Reuters got it at 0.4% GDP for Q2, flash reading or preliminary reading. Other providers are giving 0.5%, so it seems to be sort of around about that 0.4-0.5% level, but it'll be interesting to see if there is an impact by Brexit. I don't imagine there will be, because it was only about a few days really in the wake of the Brexit decision that we had through the back end of June, which was the end of Q2. But then into the afternoon we've got the durable goods for the States. Expectation, that's at 1:30. Expectation is for plus 0.3% on the month, which is mildly positive on the month, but that's on the core data. And then the new home sales, which are, sorry, pending home sales, my mistake, pending home sales, which are expected to rise by around about 1.4% at 3 o'clock. And then you are into the crude oil stocks. Again, an inventory drawdown, 2 million barrels, as we have seen in recent weeks. Actually, had several weeks really of inventory drawdowns, and that normally does tend to be supportive for oil. So you could see that, depending on the size of the drawdown, higher than expected drawdown or bigger into negative territory on this data, would be positive for the oil price. So what about the euro sterling, which is my chart today? Well, the euro sterling is starting to turn around, I believe. We've seen this corrective move, downtrend correction, in the last few weeks, but starting to see the consolidation is seeing a sort of a higher low building, higher low around about 83 figure. If I get my crosshair on it, there you go, 83 figure, which is above 82.47, and it is putting pressure on the upside. And you're seeing these momentum indicators turning on. Look at the stochastics, bull cross, RSI settling down, MACD lines settling down, both RSI and MACD in positive configuration still. And with the bull cross on the stochastics, you'd say that the bulls are beginning to sort of gather momentum again. Now the resistance, which shows best on this hourly chart, 84.25. Tested again yesterday, but rebuffed. But I think that this is an ongoing sequence of higher lows, really, that you can actually draw in an uptrend on. So it is beginning to sort of squeeze pressure on that 84.25, and a break above that I think would be a positive move. Certainly be basing out. Initially the resistance comes in at 84.70 again, but I think it would be just starting to gather momentum again to the upside. It would be a break above 23.6% fib. I think an intraday and also closing level above 84.25 would be needed to really signal the bullish break. But I think this one is building again to the upside. I mean, it is sort of playing into the whole fact that the market is now beginning to think that the Bank of England will be moving next week on rates to the downside, and that would weaken sterling. So that would be generally why the market is starting to turn this one around again. So breaking above that, I think 84.25 would be a key move near term, and reopen the upside again. You'd argue that's sort of a minimum of 125 ticks of base pattern, but possibly as much as sort of 175. So you add that on 84.25. That gives you in the realms of sort of 86 again. So it's sort of back towards the testing of the highs again, if you do see this completed breakout. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.